It's the money that's broken. It's not you. You're doing everything right. But if you're working for money, if you get paid in money, and you don't understand how that unit that you're receiving works, you can lose the value of all of your efforts if you don't manage that unit of money properly. The government lies to you about inflation. Okay, that is true today, that is true tomorrow, and that is true in the United States, and that is true in Venezuela, and that is true all across the board. If you look at wealthy people all across the world, they own and collect assets. They do not sell their assets. They, in fact, when they need cash, they borrow against their assets. And borrowing against an asset is literally shorting a currency by going long a hard asset. Do not sell your assets. That is not how you perpetuate wealth. You perpetuate wealth by holding on to hard assets.
All right, so today we have Mauricio on the show. Mauricio, thank you so much for taking the time to be on the show today.
Hey, thanks for having me on. Always a pleasure.
No problem. So I'd love to get started with the podcast and talk a bit about the beginning of your Bitcoin journey. So I'd love if you could explain a bit, I guess, a prehistory to the maybe leading up to the Bitcoin journey, and then what did the beginning phases of your Bitcoin journey look like?
Yeah, so I I came into Bitcoin in a bit of an unusual way relative to how most people in English speaking shows or North America or European people come into Bitcoin. I'm from Venezuela, for those who don't know. So Venezuela has been has historically faced inflation issues ever since I can remember. Inflation was lower than what it was, than hyperinflation in the millions of percents per year, but it was still pretty high. It was still, we were still talking about like on a good year, Venezuela would have like 50% inflation, 60% inflation. That's like a great year for the Venezuelan economy. So I grew up already thinking about or facing a lot of these debasement issues as I was growing up, and a lot of these things stuck with me. For example, when I was reading when I was learning about economics, you read about depreciation, right? And that the value of a capital asset or any asset depreciates over time, and it makes complete sense for an asset to depreciate and lose value over time as you use more and more of it and it breaks down. However, in Venezuela, you could purchase cars in bolivares for, say, a million bolivares, drive that car for 5 years, and then you could sell that car for 2 million bolivares at the end of the 5 years. Now, in bolivar terms, everybody thought they were making a great deal because you were buying an asset and you were selling it for more bolivares than what you sold it. And where that starts breaking down is when the value of the currency loses the ability to track the value of things, right? Just because the number of units of currency you need to buy something goes higher, it doesn't mean that you're getting more value or that you are actually saving or acquiring value or that value is accruing to your personal balance sheet, right? Because when you first purchased the car, $1 million was, say, worth 20,000. A million bolivares at the time you purchased it was worth $20,000. By the time you sold it, those 2 million bolivares were worth $10,000. So you're still out in real value terms, but you're making bank in bolivar terms, which starts really messing with your ability to understand where value is and what is value. Like how do you determine value when your currency is moving so fast? We've been taught or brainwashed rather to believe that the value of a currency is stable and that everything around it moves. That's equivalent of saying that the earth is the center of the universe and everything moves around the earth. It actually is not at all like that. What what changes is the value of the currency. That changes a lot more, in fact, than the value of the actual underlying good. Right? And it's this same anyway. So to bring you back to the story on my pre-journey, I grew up in Venezuela, a place with a lot of economic distortions. And as I was growing up, you read in books because I was always interested in money because my dad's an entrepreneur. He would always talk about money at lunch. We always had lunch as a family. And I remember hearing my dad talking about, picking up a work call sometimes while we were at lunch because he had to. And the instructions were, make that invoice payment. And the conversations were from, it's going to be so many thousands of bolivares, Elio. And Elio was like, my dad said, yes, for sure, process it. And then we would talk, months later, it's going to be so many millions of bolivares. And my dad would be like, yeah, just process it. Then later we would be getting into the tens of millions and hundreds of millions of bolivares. And I was always so confused at why these numbers were changing so fast. Um, and I was, you would read in economics books that you shouldn't have debt, that debt is bad, that you should put away a little bit of your savings every month to save and to have a rainy day fund. Okay. And meanwhile, when I looked around people around me, my father, who was a serial entrepreneur, would always take any money that the bank would offer him. Any debt, any type of debt, secured, unsecured, based on that business, based on this business, based on your property, based on your apartments at the beach, based on a farm, any debt he would jump on. And the first thing he would ask for every time he would, try to think about a new business is, can you finance it? Can you get some loans against it? And he was doing very well from what I could see economically. Meanwhile, I had other friends whose parents were teachers, and they would follow the playbook. They would keep a little bit of money, put it aside into their bank accounts, and they were always struggling, always struggling. Couldn't make anything. Like they couldn't afford virtually anything. Meanwhile, my father, who was operating according to the books in an irresponsible manner, was making an incredible amount of money. And the difference between these two people is that one of them was willing to challenge what they read in the books because what they were reading in the books wasn't matching their economic reality. And eventually you start understanding that it's the money that's broken. It's not you. You're doing everything right. But if you're working for money, if you get paid in money, and you don't understand how that unit that you're receiving works, you can lose the value of all of your efforts if you don't manage that unit of money properly. So what my dad did really, really well is to manage the units of money that he was receiving. The amount of work was equivalent on both sides. We're all humans. We all have 24 hours in a day. Like there's only so much, and we're not that much smarter or dumber than each other. I mean, in some cases, extreme cases, but not in general cases, right? So you can hurt, you can endure so much pain in your life if you never spend the time to understand how that money you're getting paid works. So I grew up on this in this context of broken money and seeing, and you can use broken money or breaking money to your advantage. You can use inflation not as a headwind, but as wind under your sails. And I learned that from my dad. Because what my dad was able to very quickly determine is that if you can borrow, the government lies to you about inflation. Okay, that is true today, that is true tomorrow, and that is true in the United States, and that is true in Venezuela, and that is true all across the board. They tell you a certain number so that they can keep order in society. And they calculate it in some weird, funny ways that changes every time because most often they're concerned about getting to a specific number than about actually calculating the inflation itself. But what my dad understood was that the governments were not always truthful, and that number that they published was not always reflective of your reality. So he was able to invest on the premise of, I'm going to invest in what I'm experiencing, not what I'm being told. And he basically was able to turn inflation into a tailwind because he realized that the inflation number they were giving you was fake, and that because of that fake inflation, if you calculated a real number of inflation, let's just give you an example. Let's just say that the government says inflation is 5%, and your bank can lend you money at 5%. Well, if that's the case, then you wouldn't really borrow because you can invest in something that is keeping up with inflation. Let's just call it real estate, call it a US dollar, right? In Bolivar terms. So if you can borrow at 5, but you're going to invest at 5, it's not really that compelling. You're not really going to take the borrow. But if inflation is in fact 20% and not 5, and you can borrow at 5, all of a sudden inflation is that engine that is going to create those returns for you. So you borrow at 5, you deploy them at dollars who are growing at 15, or not growing at 15, but not getting debased at that fake rate that your government's telling you. Over a course of a year, you're going to need a lot less dollars to repay that Bolivar debt. And that is how Venezuelans perpetuated their wealth. Not dissimilar to how Americans perpetuated their wealth through real estate. Because we've always had Bitcoin in the sense that there's always been an asset that is not depreciating at the speed at which all the others are. And you can use that as your anchor to short a weak currency. Venezuela, we shorted the Bolivar against the dollar. Americans, they short the dollar against US real estate. They call it a mortgage. It's in fact a massive short position on your dollars. And they both do very well. And you will be hard pressed to find any person who was taking out a loan in a local currency and bought gold with it or bought US real estate with it and has done poorly. So when I saw Bitcoin and I found Bitcoin, and we can get into how we found it, but once I found it and I saw that it was accessible to Venezuelans and Americans and Canadians and Zimbabweans anywhere across the world, what was holding people back from placing this trade all over the world is these arbitrary complications and restrictions. It's very hard for you to get dollars in some places where they put in a capital control. It's very hard for you to buy a house in a place where there's no bank financing. It's very hard for you to find gold in a place when it's not readily available. Bitcoin changes this. Bitcoin gives anyone the ability to buy a fraction of a dollar of an asset that will not depreciate. And it allows the entire world to not just protect the value of your savings, but to use the inefficiency of your local governments in your favor by allowing you to short the currency by borrowing against your Bitcoin. That is a very long way of explaining to you why I'm so passionate about loans and Bitcoin.
Yeah. But I can hear the passion in your voice, and because it is a very important topic, and I think we're talking a bit before the show. Your perspective is really interesting because you are coming at it from a very different background than a lot of people, maybe in the U.S. or Europe, and so it's very interesting to hear that. And I think in countries where there is hyperinflation, I think it's sometimes difficult, but I know it's difficult for people in countries like Europe or the US to really grasp what it's like to live through that. So I'd love to hear a bit more like your perspective on how is it like living through a country where there's super high inflation, even hyperinflation, and then on top of that also, why do you think that people, not everybody does what your dad does, right? Because it seems simple in theory. If you can get a loan from a bank at 5% and then convert that into an asset that has a higher rate of return, why doesn't everybody do that?
Because my dad loves risk. And not everybody loves risk, or not loves risk, but they have a tolerance and an appetite for risk because it is, in his view, my dad comes from a very, very poor family, very poor beginnings. And the only way for you to make an outsized gain relative to everyone around you is to do things or take risks that others aren't taking. So my dad from very early on understood that if he wanted to advance in life and if he wanted to kind of move up in the ladder of economic progress, he had to do things that people around him weren't doing, or he had to try to emulate where people above him were doing. If you look at wealthy people all across the world, they own and collect assets. They do not sell their assets. They, in fact, when they need cash, they borrow against their assets. And borrowing against an asset is literally shorting a currency by going long a hard asset. My dad understood this early on because he saw the bosses of his father's father. So my grandparents' bosses, my parent worked at my grandfather was a mechanic, and for many years he worked at a farm. My dad learned very quickly to emulate not what his dad was doing, but what his dad's boss was doing. His dad's boss had the farm. His dad's boss spent all his day at the bank. His dad's boss continuously tried to borrow against the farm. And my dad, that stuck with him. He realized that some guy that shows up to the bank and knows how to borrow at the right rates, take that money and put it somewhere else, will make more money than all of his mechanics combined. So my dad said, I don't want to be a mechanic. I want to be that guy. Even though my dad went to university for mechanical engineering, he very quickly realized that the money was in the money, not in the actual work. So I'll give you an example. Go pull. We are very passionate about inflation not being what the government tells you because we've lived through it. I've seen the lies. Most people haven't. If you ask most people today, I don't know where exactly you're based in Europe right now, but go out on the street and ask people ask them two things. One, what is the current rate of inflation? And then the second one, ask them, where does inflation come from? 9 out of 10 people in the world cannot answer the question. And the reason more people don't do what my dad did is because it's money has been made deliberately complex so that you don't understand that the reason your money is worth less every year is because the government is irresponsibly spending more than it makes every single year. That is too much truth. You will not find a single government spokesman that tells you this. And when you do, you're labeled as an extremist. And so I am of the view that it will be very hard, if not impossible, for governments around the world to behave responsibly and to spend according to what they make. I'll give you an example. A family of 5 has an impossible time perfectly scheduling how much money they're going to spend for a year. And we are expected to believe, and mind you, by the way, this we get normal families get paid every month, and you can kind of plan out how much you're going to get for the entirety of the year and how much you spend. But life happens, unexpected things happen, and the same way you can get an unexpected medical emergency, the equivalent to that in a country level is, oh my god, we got a tornado, wiped up 2 of the states. Where are we going to get the money to fix that? There's 2 options. You either print the money at the expense of everyone else in the country to fix that state, or you say to that one state, we're sorry, guys. You're just going to have to eat it this time. We're not going to be able to pay for that. And in theory, some Bitcoiners would say that second option is the way to go. That the second option is because there is no money. It's not fair for you to take. In practice, you can't do that. Because the society breaks, you get social upheaval and uproars, and then you realize that the mob is actually very powerful. The mob is a very scary thing. It's a very powerful thing. And when the mob turns against the wealth, it takes it because the mob has nothing to lose. And they behave as such. The wealthy people that have things to lose, they start saying, well, let's hedge, let's go to a different country, let's maybe move our wealth from here to there. But eventually nobody wants to do that. So the easiest thing is to just concede and say, here's some of my wealth. Okay, let's redistribute some of this so we can get back to harmony and keep things going. So I don't really see a sustainable way for us to completely eliminate the government's ability to print money to put out fires. And because of that, because we're going to always need to have that call option, the tendency will be for currencies to become debased and more debased and more debased and more debased. It doesn't really matter what you put us back of it as a reserve. It doesn't really matter. So that's why I believe that there's a systematic tailwind to Bitcoin and to hard assets in general. Look at where markets are today. S&P all-time highs, Bitcoin all-time highs, gold all-time highs. We have interest rates at 5.25%, and we're just coming back from what some would call one of the worst financial recessions in history. Capital prices don't reflect that. Capital prices reflect that governments will continue to debase the currency regardless. And don't take it from me. Look at asset prices. Like, you don't even have to believe me. Look at the facts.
Yeah, no, I mean, I fully agree with you, and I think this also stood out to me specifically during COVID, because for me that was the first, and I think for a lot of people, the first like true global crisis that we were living through. And you would expect. I mean, in the initial announcements of the lockdowns and everything, of course, a lot of asset prices plummeted, but in the 6 months to a year following COVID, everything was hitting all-time highs, including Bitcoin, of course. And you kind of look at that, and you look at the reality of the world, and you say, okay, well, how does this make sense? Because in my mind, we're living through one of the most global crises that we've ever had, but none of the financial markets reflect that. And I think through that, you also noticed a lot of um, people, I think, turning against each other a bit, because the thing is with this type of environment is the wealthy, those who have cash, those who can allocate their money into assets, will find a way to do so and will profit from the system, right? But then you have people in Venezuela, in other countries, even in the US, who are maybe living paycheck to paycheck, who don't have the money to spare to put into hard assets, to allocate into those things, and they're getting more and more behind, while those who can afford to put in assets are getting more and more ahead. And so how do you see those how do you see that resolving, in a sense where you do have the ability to have government intervention, but where we don't have this giant wealth inequality gap that seems to continue to grow? Because I think right now the people who profit from the current system the most are the wealthy, and the ones who are disadvantaged are the poor. So it's seeming like this growing gap that keeps growing and growing.
Yes. So, in the words of Lynn Alden, nothing stops this train. There is no stopping the asset price train. The only thing that stops asset prices from growing higher is a complete restructuring of the system itself. And I don't really believe we're going to see that in our lifetimes. Like, if you look at if you, debasement of currency is not a 21st century problem. Romans debased their currency. The Greeks debased their currency. Most kingdoms debased their currencies. It's it's happened systemically throughout history, and the reason that this happens, my interpretation or my appreciation of why this happens, is because there's a big education gap in that some people that understand how money works take advantage of how money works, but there's also a flip side to that, which is, you know let me kind of restructure my answer to this. I see it. uh, I don't see the problem that we're facing today as a problem that is unique to our point in time in history. I think that this issue around inequality has happened historically since the Romans. And I believe the structural issue behind it is that if you look at normal natural distribution of things, it's a bell curve. There's going to be people on this one side that are going to do very well. There's going to be some people in the middle that do okay, and there's going to be people on the other side that do really poorly. Okay, that holds true in most parts of nature. Most parts of nature. Humans are the only group that wants to actively alter that natural distribution of things because we don't feel comfortable with the left side of the curve. We believe that everyone should be at least in the middle. And the way we try to do so is by taking the right tail end of the curve and trying to give it to the left tail end people of the curve. And we keep trying to play this game, right? Until there's either too many people on the left or the people on the right don't have enough. And then the whole thing breaks, right? And so I just think that we are part of this cycle, and we as humans, there's going to be always going to be a lobby that says we need to redistribute wealth from the very successful to the very poor because it just makes society be more harmonious. And there's an equilibrium in these systems, right, where for a period of time you have these equilibrium points, but then it breaks because you get too many people on either end of the spectrum, right? So in Venezuela, there was some equilibrium when I was growing up, but it was about to break. It was just in the brink of breaking. And then that equilibrium broke to the point where too many people went on the left. And along comes one guy, because politics is run by democracy, is what we have decided is that the rule of the majority is what holds, not the rule of the smartest. It's not the rule of the wealthiest. It's the rule of the majority. And if you go back to natural distribution, over a long enough time frame, there will always be more people on the left of the curve than on the right of the curve, systematically, because the guys that get the money will keep accumulating more and more and more of it, and the guys who don't will just keep getting more and more left behind. And eventually, along will come a guy. In our case, his name was Hugo Chavez, who decided to speak to people on the left side of the curve and said, "Hey, we're not being aggressive enough with the right side of the curve, guys. We need to go get that money. That's how we're going to solve this." But the whole point that misses is that it's those guys' ability to take risk that keeps the left hand of the curve employed. So when you take their wealth and you prevent them from doing their activities, the whole economy breaks, the whole system breaks, like Venezuela. And you end up with a totalitarian state-controlled economy that it prints money to infinity and no end, and that eventually kind of digs its heels through military prowess, and it doesn't really break until there's a massive, massive, massive revolution. Sometimes it never breaks. Look at Cuba. Look at North Korea. Those are systems that got so entrenched that any dissidents just had to leave, because any option of a fair shift in thinking went out the window, because they understand that the guys on the right will most times always be a minority. And as long as they're talking to the majority of the people that get them elected, they're going to keep talking to them. And so, yeah.
No, yeah, no, but it's a difficult topic, and I agree with your stance fully. I think wealth inequality has been something that's been around for forever, and I don't think that's a problem that you would ever be able to fully solve, nor would you maybe even want to be able to solve that, because, like you said, it's the people who are wealthy that typically get there for a reason, because they are able to be productive members of society and contribute in a way, whether through a business or some other means to society. And I think you need that incentive there. You need that capitalistic incentive for people to be productive members of society. I think the problem that I'm more so seeing now is, like, I think kind of goes back to the problem of inflation, because now I notice a lot of people, even in the US, that you're forced to be also become an investor outside of your traditional job, because it's not enough to just earn a good living. And like you said, like the teachers were doing in Venezuela, put a bit in the bank. Like my parents, for example, they lived very traditional lives, in a sense, where when they were growing up, they lived below their means, they saved, and they were able to build a good life off of that, because at the time, at least in the US and Europe, that's the system still functioned properly enough to allow for that. You still had, the wealthy and the poor, but I think the 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 overall idea of earning money, putting it in a bank where interest rates are relatively okay, your inflation isn't crazy high, that still functioned. But now I'm starting to see that break down also in parts of America and Europe, and, like I said, where people are forced to become investors. And that's the point where it's like, when you have a a mom of five who's a teacher, who then has to come home to kids, who then also worry about managing money, that's a complete failure of the system. And so, I guess what I want to touch on is, like, I see Bitcoin, especially in parts of the world like Venezuela, as a solution to this. Well, I guess you could speak a lot more on this, because it does still require a lot of education. But going to your discovery of Bitcoin, especially in a place like Venezuela, what was your initial reaction to it in terms of solving a bit of that problem?
So my first interaction with Bitcoin was my youngest brother wanting to mine it in Venezuela. That was when I first get exposed to the white paper. So at this point, I'm still thinking about Bitcoin in theoretical terms, right? In sort of like abstract terms. I haven't really seen Bitcoin in action. At that point, my appreciation of it was that as an activity, mining required a lot of electricity, a lot of internet, both of which were available and subsidized in Venezuela. And it produced an asset that could be sold for dollars in the global markets, not in a Venezuela government controlled environment, which meant that you could get fair pricing for that good, which was very rare in Venezuela. Most things that you would sell would have price controlled by the government, meaning you just got screwed anything, no matter what you did, right? But Bitcoin was this sort of um, outlier in that it allowed you to use inputs that were widely available, and it allowed you to sell the output in an open market. And in the context of the country completely failed, my youngest brother wanted to do something in Venezuela, and everything else was just involved to being too connected with the Venezuelan system and economy, and it was just not a good idea. But when he presents this to us, my dad sends me the white paper. I read it, and I thought it would be an interesting input output type of setup. So I said yes. Didn't really think too much about it. It was when I got back home and I saw my brother's business was thriving and all of my friends were leaving the country that I got really interested, because I asked him how he was making the money, and he says, I'm selling the Bitcoin. Let me show you. Now, as I mentioned in the show with Peter, like importantly, not a lot of things in Venezuela, as I just told you, could be sold for the fair open market price. Many things were price controlled, in particular, the things that people wanted to buy and hold to protect value. So, very hard to buy and sell a house, very hard to buy and sell a car, very hard to buy and sell cans of tuna, tires, anything that would not perish in within months, you would use as better store of value than your currency.
And
And the
what do you
government
mean by, sorry, not to interrupt you, but I'm very curious about that. Like, what do you mean by very hard to buy? Like, just a lot of restrictions in buying, or more the availability of it?
yeah, so a lot of restrictions in buying. So, for example, if you wanted to buy or sell a house, whose price was changing in 20 to 30 to 40%, like if you wanted to buy a house for, I don't know, 10,000 bolivares, so let's just say 10 million bolivares, and then 3 months later you were going to sell that house for 20 million bolivares. If you paper that deal the way it should be, you need to pay the government an insane amount of taxes just based on the inflation. So you're paying taxes not on gains, but on the inflation that the government is producing themselves, which, by the way, also happens in North America. So you would clearly, or most people would try to find a way to not have to pay taxes on things that were not their fault. It's the equivalent of me trying to tax you. Like it's really this: the government debased the currency, they made the prices of your assets go up, and then they want to tax you on the gain that they themselves caused. So it becomes very difficult for you to do this with properties. In When it came to cars, people were doing this in cars. They started limiting the number of cars you could own as a person. They started tracking the number of cars you own at any one time. They don't allow you to do this more than one or two times. And when people said, okay, I can't do it with property, I can't do it with cars, they started going to things that could hold their value, and they were components of that. So, for example, tires for cars hold their value very well, and they can be repriced and they don't perish. So people started accumulating tires. Plastic chairs was another one. Plastic chairs you can buy and sell and reprice, and there's generally a demand for plastic chairs. So plastic goods in general became a thing people started to accumulate. Cans of tuna that would last months, and you could trade the can of tuna for a pound of chicken. You could trade the can of tuna for, you go back to the barter system because goods hold value better than money. So it sends you right back to the barter system. And so this is kind of what I mean. I forget what the exact question was, but that is what makes it very difficult. When your money breaks and you have no unit of account or method of exchange, then you start exchanging the actual things themselves. And then you go back to the Stone Age because you got to get the coincidence of wants. You gotta find somebody that needs the tuna and wants to give you the chicken. And so it becomes a nightmare to transact. The economy grinds to a halt. Uh, so yeah, sir. I'll pause there. I don't.
No,
Let's
no,
go
no.
back to
Yeah.
the.
Well, I had interrupted you during your explanation a bit on how you got into Bitcoin with your brother's business, because we were talking about what you could and couldn't buy in Venezuela to be able to preserve your wealth. So yeah, I didn't want to interrupt you, but if you could elaborate a bit more on that process of discovering Bitcoin and how you eventually got into it.
Yeah. So to go back to it, it was when I went back to Venezuela and I saw him thriving and my friends crying that I said, "What are you doing?" And he said, "I'm selling Bitcoin." And I, famously, I said, "Show me." And he said, "Give me your bank account." And I saw him place a trade for the Bitcoin he had just mined, and he was able to sell it in the open market rate, like in the dollar value that people were paying for it in the United States. And then he was able to sell those, like the equivalent Bolivar amount to those dollars at the fair Bolivar to dollar rate in the open market. And then those Bolivars hit my bank account in the context of the most hostile economic environment and most hostile capital controls that I have ever been through in my life. I was able to buy and sell a good with no restrictions at fair market pricing, and it landed in my bank account. And that's when I lost my marbles. It, it was in that moment of time when I said, this tool, because what I thought to myself was, Venezuela is not going to be the only place where this happens. This has been happening throughout history, as I told you. So to me, Venezuela is just an accelerated version of what a society collapse looks like. Right. And we all go up and we all go down. I was really only witness to the down part. I was never really there when it was going up. And I think I'm seeing some of that in some parts of the world, like El Salvador is a place that looks like it's an up and up, right? And so we're witnessing that with our own eyes, what a society in up and up looks like. Something we hadn't seen, at least my generation. I don't think I had seen it. We were born into the golden age of Europe. We were born into the golden age of the United States. We were born into the golden age of a lot of things. But we haven't really seen, in fact, I would argue that maybe China was an example. We saw China kind of come out of poverty. I'm not too close because I'm not in that part of the world, but it stands true that China has become an economic powerhouse, and it wasn't so when I was 10 years old, right? So the flip side is that there's both sides, right? There's, you can be either in an El Salvador or in a Venezuela, right? And so you can look at this and say, okay, where do I want to be? And if we assume that things are going to do this and that, and if we assume that we were born into the golden age of two of the world's superpowers who may at any one point roll over, how do you want to be positioned? Do you want to be holding the fiat currency of those potentially rolling over empires, or do you want to be positioned in the hard assets that they're going to have to buy as reserves for those fiat currencies? I'm on the reserve side. And that's why I love Bitcoin. And I believe Bitcoin is a reserve asset that should not be sold. Hence why I invested my entire time and energy into a business that lets you keep the Bitcoin and borrow against it, allowing you to short a weak currency and hold a strong asset.
Yeah, fully agree, and I want to get into that as well, because so you go from discovering Bitcoin. I mean, I think it was in 2015, if I'm not mistaken, right? That you,
Yes, around that time.
yeah, around that time. And then Ledn was founded in 2018.
It's 2018, yes.
Yeah. So how did you go from well, from first discovering Bitcoin, identifying that need in the market, to then building Ledn? So what inspired you? Well, you just mentioned it a bit, but I think it's a very important concept. So I'd love if you could elaborate a bit on the motivation to start Ledn and the reason for doing so.
Yeah, so Ledn comes uh, as a product of the conversations between Adam and myself. So Adam is my business partner. He's the co-founder of Ledn. He's the CEO. I'm the CSO, and we both started the business together. And when I started mining Bitcoin, I came to Canada because I needed to find cheap power. I didn't live in Venezuela. My brothers did. I wanted to do the same thing they were doing, but my power wasn't as subsidized as theirs or at all. So I needed to find a place with cheap money. And Adam had been financing renewable energy projects for 10 years here in Canada. So he knew everything about power and financing power. So he says, go to Quebec. It's the cheapest power in the free world. And so we set up a mine in Quebec, and I convinced him to set up a mine with me together. As we were building this, I had already helped other people build their own mines and grow their mines and my own family's mines. And in the process, we learned that because at the time you can only pay for more Bitcoin equipment in Bitcoin. And the only business that was really producing any excess cash flow that we could reinvest was the mining operations. So we basically had to reinvest our mining output into more equipment. And the equipment had a very long lead time, and Bitcoin was just ripping as you know during this time. So it always worked against us to buy more equipment. We should have just held the Bitcoin. We would have done a lot better if we had just been able to keep the damn Bitcoin that we had mined. But we decided at the time, the first time we thought, okay, it's a timing issue. The second time it's like, no, this is a structural issue. We need to not sell the Bitcoin. And so this is right around the time where we're trying to grow our mine in Canada. And Adam and I think to ourselves, well, if anyone's going to lend money to a facility that does mining, it would be in North America. It would be the most sophisticated capital markets. Let's see if we can find a loan for this. Stefan, we got laughed out of every room.
Really?
We were told that Bitcoin was not an asset, that who would do that we were lunatics.
Hmm.
And at that point is when we looked at each other and we said, this is a real opportunity because the TradFi people are just out for lunch on this.
Hmm.
And there's a void in the market. There's a real need for this. And so we decided to set up a very simple, very boring, very regulated business in Canada to do Canada's first Bitcoin backed loan. And our thesis back then was that if we're going to be lenders, we need to have the ability to talk to the biggest companies who have access to the cheapest dollars so that we can borrow from them to lend to our Bitcoiners.
Yeah.
And that is largely why Ledn is obsessive about regulation. It's obsessive about transparency. It's proud to never have had a token, because we believe that if things played out in the way that they have, then it would be this model, the one that would benefit the most. And a lot of that thesis has furiously played out. Um, and it seems to be really accelerating this year. This concept of Bitcoin as a reserve, because now the United States is touting it as a potential national reserve asset. Now it's in the balance sheet of the biggest corporations, the biggest individuals, and now governments.
Yeah.
And so, if the richest people, the smartest corporations, and the smartest governments are telling you not to sell this thing, what do you think you're going to do at an individual level?
Hmm. Yeah. No, I agree. I think it's a brilliant idea and a much needed product in the space. I think it's obviously something that if you look at hardcore Bitcoiners, it's gotten a lot of uh, feedback here and there, but I think it is something that's necessary because there isn't a lot of opportunity to, like you said, keep your Bitcoin while having some type of cash and not needing to sell your Bitcoin directly for cash. But I think it's also still a foreign concept for a lot of people, a Bitcoin backed loan. Like what it, because I don't think a lot of people even have taken out a collateral based loan. So could you maybe just explain a bit more how it actually works, a Bitcoin backed loan?
Very happy to do so. So the way a Bitcoin back loan works is, let's just say that you Bitcoin is the biggest part of your portfolio. Let's just say you have $100,000 in Bitcoin and no cash. Whatever you get paid every month, you pay in rent and things and your own life expenses, and you don't really put anything aside. If you do, you put it into Bitcoin. Okay. If you get an unexpected expense, let's just say you got in a car accident, not covered by your insurance, whatever. You need 30 grand. Okay. Where are you going to get the 30 grand from? If you go out and you sell that Bitcoin, the 100K that you have, you're going to pay potentially capital gains tax on the difference in price between when you bought it and when you sold it. Okay, so number one, this thing is going to cost you probably 20% in taxes of whatever you sell. Okay, off the bat, off the top. Second, you're going to lose ownership of the Bitcoin. So if once you sell it, if Bitcoin goes 30% higher tomorrow because MicroStrategy did another bond and bought another X many million of it, you're not participating in that upside. So at this point, you've capped your upside and you've paid a decent amount of percentage points in taxes. Okay, let's just call it 20%. Then you go out and you go about your life, you pay the debt, you pay the expense, and then you wait to see when, if ever, you'll be able to rebuy back the Bitcoin that you sold. And when you get that money back, by the way, you may be able to buy back the same dollar amount of Bitcoin, but it will not be the same number of Bitcoin. You would have lost the upside for having sold the Bitcoin and then rebuying it again. When you use a Bitcoin back loan, you could come to Ledn and you could put $60,000 of that Bitcoin that you have as collateral for a $30,000 loan. When you borrow against your Bitcoin, it's most often not a taxable event. So you're really only paying interest for the time you have the dollars in use. At Ledn, you can make partial repayments at any time. There's no penalties for you to partially pay anything. And as you pay it down, the interest you're accruing starts dropping and dropping and dropping and dropping. So on one side, you save more money in terms of percentage points than you would if you paid taxes on the Bitcoin you sold. So on that side, you save money. On the other side, you keep the upside because it's still your Bitcoin. Even though it's pledged as collateral for a loan, if that Bitcoin goes from 60K to 100, it's your Bitcoin.
Yeah.
You don't need to, we don't want any of it. It's just your collateral. You just pay us back what we lent you and the interest, and you just take it back. That's the whole point of it. So you keep the upside, you're better off in terms of tax treatment, and it's still your Bitcoin. So it works in a very similar way to a home equity line of credit, right? Like if you own a house and you want to send your daughter to a better school, you're not going to sell the house to pay for the school. You can't sell a room of the house. You can't sell your garage. You borrow against your home equity line of credit. You pay for your daughter's school. Your house continues to appreciate in value, and maybe you can refinance that later on into a better interest rate or pay down the loan, etc. But you keep the hard asset. Go back to the very first thing we said on this interview. Do not sell your assets. That is not how you perpetuate wealth. You perpetuate wealth by holding on to hard assets.
Mm-hmm.
And if you
Yeah.
need liquidity, borrow a weak currency from those hard assets. And let mismanagement of currencies do its thing.
Yeah. No, I agree. I think it's a very, very good concept in the space and very necessary. I think from your experience, because I think one of the reasons why it's probably also not been perpetuated widely in the space, like Bitcoin backed loans, why there's not maybe more companies like Ledn, is because I think also of the volatility in Bitcoin, right? It's not the same as a house or something else that you could get a collateral backed loan against. And I think that's why a lot of people tend to be hesitant, because you do have the upside, but you could also be victim to the downside. So what is a bit your feedback towards that and your response, and also maybe your just experience with customers towards that?
Very happy to. So happy to talk about that. Yes, when we lend you money based only on the value of the assets that you're placing as collateral, the risk is that the money we lend to you can never be more than the market value of the things you placed as collateral. If you gave me something that's worth 10 and I lend you 8, and what you place as custody or as collateral goes down to 7, and I lend you 8, then I am underwater. Then the integrity of my entire operation is at risk. So no lender should ever allow you to owe more than what you have in custody to them. Because if that's the case, then they're taking a massive credit risk on you as a client. And they could be doing this with millions of others, and you don't know how robust or how reliable the structural of that lender could be. At Ledn, every margin call and liquidation is programmatic. And so the system and the algorithm has never failed in our entire operating history. We never lost a penny or Satoshi in the client retail Bitcoin backed loans. And I'll give you another example. We just recently had a big 30% drawdown in Bitcoin thanks to the yen carry trade, right? They're on whatever reason they want to make it. At Ledn, only 2% of our book was impacted by a liquidation. And within 24 hours, the number of new loans coming in trying to buy the dip far exceeded the number of people that were impacted by liquidations. So our loan book is like nothing ever happened. It just kept going up and to the right. And what we have seen over time is that clients, as more of them understand how Bitcoin backed loans work, as more of them go through these cycles, more of them learn and say, I need to have a little bit of extra Bitcoin. I need to plan myself. If I'm going to borrow $30,000 and I want to put 60 as collateral, I better have another 20 to 40 excess collateral available so that I can top up my loan if it needs to. And at Ledn, we give you many tools to do so. We're actually one of the few companies that do this. We have an option called auto top up, which means you can voluntarily or proactively send excess Bitcoin to your custody account and pre-authorize Ledn to sweep it to your loan address if it ever needs it. Such that if you're climbing, we had this at the beginning. People were in a cruise ship. They were, doing a hike and they were off reception, or their cold storage was took them 3 days to get because they had geo distributions. We said to them, listen, we can't control when Bitcoin moves. All we can do is give you tools to send more assets to your loan and do this in the most frictionless way we can. And 98 or 99% of the people that have used this feature have had their loans protected. Only I think one or two cases where the person activated it, but they just had dust in their transaction account. So it didn't move the needle on the liquidation levels. But everyone else has worked flawlessly and our clients love it. And importantly, the same way we ask you for additional Bitcoin if the price moves down, you can take off excess Bitcoin if the price moves up. That's also a feature of Ledn, one we love, and our clients do too. So it's really, you really need to plan. And I try to be vocal about this because we want everyone to come out of Ledn with more Bitcoin, not less.
Yeah.
So if you plan it, everybody's going to be happy. If you don't plan, a liquidated client is not a happy client. It's not happy. It's not good for Ledn. It's not good for the client. So we want to do our best to prevent that outcome.
Yeah. Very, very well said, and I think it's a really good model. I think also what it comes down to at the end of the day is also personal responsibility. You know, the ethos a bit about Bitcoin as well. If you're taking out a loan, it's a bit like you said. You have to do it with a bit of risk mitigation in place and understanding that there is risk in it, but you're also taking that risk voluntarily. So I think it's a great explanation of that, and it's very interesting for me because I think it's a space that I think is really, really fascinating, and we'll see a lot of development in the coming years. But I could keep going on about this specific topic, but I know we're at the end of the show here. So, my final question for you today is just what advice do you have for new Bitcoiners coming into the space?
Focus. That's what I would say is do not chase the shiny light. Focus and, you know, at Ledn, we like to say, and credit to Adam on this one, at Ledn, we like to say the best restaurants have the smallest menu. If you do a few things, but do them better than anyone else, and that's you can't be passionate about something. There's no way of fabricating passion. Passion comes through focus. When you focus something and when you love something and when you get so good at that one thing, everyone around you gets intoxicated by your enthusiasm towards that one thing, right? And so what I would say to any newcomer Bitcoiner is if you're curious about Bitcoin, don't stop until you feel like you've learned and read absolutely like anything that anyone has ever put out about Bitcoin. That'll be, and you'll be hard pressed to do that. And even within Bitcoin, there's lending, there's trading, there's mining, there's just so many things there's development, there's open source development, there's so many ways where you can go, that I think focus is a very valuable thing because focus creates expertise, focus creates enthusiasm, it creates passion, and that's what drives people to rally around you.
Yeah. Very, very well said, and I couldn't agree more. And I think the passion and everything from your side is very apparent. And so, Mauricio, I thank you so much for taking the time today. I personally learned a lot, and you know, I've been in the space for some years now, but it was a really, really insightful episode, and so I appreciate and thank you for your time.
Hey, thank you, Stefan. Always a pleasure, and we can do this again next time.
Awesome, thank you.